Welcome to our eSignal weekly Forex forecast. My name is Jay Norris. I teach trading at Trading University. And as always, we need to remind you trading involves risk of loss and is not suitable for all investors. First market we're going to take a look at will be the Australian US dollar. Aussie US dollar is certainly in an interesting place on the chart. You see that green line that indicates support for us. Let me show you our RTT ratio, and that'll explain what that green line is. If you go all the way back to the grand pattern in this market, you go back 5 years or so, the pattern's still up. So you have that long-term pattern up, and that green line actually indicates support there. One of the rules in our trading plan that we teach is that the time to look for counter trend trades is when you're at long-term support or resistance. So you're definitely at long-term support and resistance. This is a futures chart. The reason I have the futures chart up is you can see the actual volume on there. And if you look at the volume into the new year here so far, into 2015, the biggest volume days were on up days. You have green candles there. So far and away, the volume in here has been buying. So what you're seeing is a lot of long-term short liquidation. You're seeing short covering. You may even start to see accumulation at these levels, but by and large, your futures traders, who tend to be your larger traders, they tend to use the futures more, they're coming in on the buy side and then showing up in these green candles here, the volume. So that's definitely going to be something to watch. Here, I'll go to the cash market and I'll show you something I'm watching closely also. Take it down to a 4-hour chart here. You'll see it. That level right there, 78 even, that's a big level. That's kind of what I've been waiting for. I wanted to see the market start to probe above there, go back to that ratio. What'll happen if you get above there again, get above that level 78 even, that resistance right there, then these two short-term cycles here, these two very short-term patterns, the 5-day and the 10-day, they're going to shift in line higher with that grand pattern. So you're going to have a short-term trend shift in line with that very long-term trend shift, and that's what we want to participate in. That's what we watch. So I'm pretty excited about the Aussie dollar given the prospects of potentially a long-term market bottom here. Next market, the dollar chief. Dollar chief, we covered it last week. You're at the 50% retracement of that massive sell-off that we saw at the hands of the Swiss central bank intervening in the market. So again, you can expect not a whole lot of activity out there as they sort things out at that key level. Hasn't really provided resistance yet, so that's pretty telling right there that the market's really not respecting that level. It's probing above it, can't quite close to it. So that's still a level that we'll watch longer term in this market to see how that plays out. Not a lot of interest for us in the Swiss right now, frankly. Here's the dollar index. Dollar index, you see it kind of flatlining, and you see that purple line. That purple line is the 50% retracement of the last down cycle. Here you can see it. You go all the way back, that cycle that started in 2002, and you had the 10-year bear, the great bear in the US dollar, and now you've retraced nearly 50% of that. So again, that 50% level, critical level. Usually markets slow down there. They kind of take pause there. So we'll see what happens there. When it comes down to the dollar index, we're really focusing on these lower time frames. There you can see some activity. Market's still delivering as far as buying dips in there. And when it comes down to it, when you get a market that starts to slow down because it's at critical longer term resistance or support, really that's when you have to scroll down yourself to those lower time frames, and everything becomes a little bit more dynamic for you. And that's really what we do as day traders too. And speaking of day traders, here's our updated benchmark, and that's our day trade benchmark. That's signals on the 15-minute chart, and you can see we're still focusing on short the euro and long the dollar index, and you can see that's done pretty well. But into February now, we've had 6 trades in the month of February, 4 winners, 2 losers. That's starting to normalize itself. I'm pretty familiar with a winning percentage, probably right around that 70% level, and I'll take that any day of the week. I think January was great in that you didn't have losers, but on the other hand, that's a bit of an anomaly. That was basically a runaway bull market, and that's That's what a runaway market will do for you as a trader if you're on the right side. But you can see things starting to normalize. You're starting to have losers here and there. That's going to be the norm going forward, my guess. But there's your dollar index. Again, we'll take a more shorter term view of things here, a little bit more dynamic analysis of it on those shorter time frames, a little bit more proactive as opposed to more static and long-term analysis where you're buying and holding. Now from a trader's perspective, things get a little bit more shorter term. Here's the euro. Here's your daily chart on the euro. Not sure what to think of it. Again, it'll probably come down to that shorter term dynamic analysis to determine where we go from here with it. You can see either way you're not really making headway on the upside or the downside. So things pretty quiet in the euro, and we still think that's a reflection of pretty bearish fundamentals. Let's look at euro futures where you can see the volume, and the first thing I see is you don't have that volume pattern, that friendly volume pattern that you had in the Aussie. Here you can still see the big red candles, the big volume days are still on the downside. So, and that's why we've been saying for the past couple of months now that the Aussie, completely different animal than the euro, different fundamentals, etc. So just because we like potentially buying dips now in the Aussie, that doesn't mean that we're going to change our tune when it comes to the euro. We're still very much interested in selling rallies in the euro. And that's what you're looking at here. If I go down to a shorter term chart, 4-hour chart, you can see I have a resistance level drawn, and look at how well that resistance is holding. So, hey, we're still looking at the short side in the euro. One thing to keep in mind with the euro, though, I've learned this over the years, the market with the most amount of shorts in it has the biggest short covering rally. So if the dollar index does decide to correct based on what's going on in Europe right now as far as stabilizing the Greek situation, and you get a euro rally out of there, it could be a pretty big one, pretty fast one. On the other hand, longer term, we would still see that rally as an opportunity to sell. So we're going to have to see. Next market, gold. Had a pretty good run in gold for sure. It got to that critical resistance level there, and it turned around pretty hard at a pretty significant level right now. Let's look at gold from a weekly perspective, however. You look at that weekly chart, and you can't help but notice that predominant pattern of lower highs, and that's really going to dominate gold. This gold in a critical place now, though, following this downside correction. Is that a correction to a new rally, or is that a resumption of the overall long-term move? That's the billion-dollar question right here. So critical right now, critical time for gold. Is it going to hold 1200? Will gold find support 1200 and just below, and hold this long-term trend line and potentially come out of there? That's the big question. Not sure, not quite sure the fundamentals on gold other than it's a fear indicator for the U.S. economy. You put a gun to my head, I'd say the U.S. economy is going to win out this spring. I think we're going to even eclipse the numbers that we saw for sure the U.S. economy will eclipse the first quarter numbers of 2014. The big question is, how do we do in that second quarter where you had that blowout second quarter in 2014 last year? I'm on record as saying we'll eclipse the first quarter numbers, and we'll do it again. We'll improve on those second quarter numbers from 2014 in 2015. And if that's going to be the case, then awful hard to hold gold here, awful hard to think that you'll mount a rally from here, as opposed to continuing the primary pattern, which is down. So that's which way I'm leaning in gold right now. Next market, dollar yen. We've been saying all along, dollar yen, you're probably in an area of the chart where you're going to go sideways, potentially start to top out here. I'll show you on a daily chart. Frankly, dollar yen's really not on our radar much because it's come so far so fast that buying dips in here even on the shorter term doesn't make a whole lot of sense to us. There you can see that massive rally. So really not on the radar for us as a trading vehicle. Speaking of trading vehicles, last market we're going to take a look at, it's going to be the Kiwi, New Zealand. We're interested in this guy because it's holding long-term support. Let's get down to a daily chart here, and you can see here, I'll break out the ratio here. Look, the Kiwi's up on its 5 and 10 day pattern in line with that grand pattern. So you got that long-term 5-year patterns up, and you got the 5 and 10 holding up now too. So this interesting market to us, especially if you trade in the evening U.S. session, or you trade before London opens, you trade the Asian session. We think this is a guy to watch potentially to buy dips in here. Kiwi. Hey, thank you so much. My name is Jay Norris. I teach trading at Trading University. Thank you, eSignal, and we'll see you next time.